Forex chart formation patterns lesson 10, Forex box range. A neutral chart pattern indicates a box range. It forms when there is a prolonged period of indecision in the market, and it's defined by strong parallel support and resistance lines. As you can see from the chart, the price has been bouncing back and forth from the support to resistance lines and is unable to break out in either direction. There are two ways to trade this. Firstly, you can trade the range. Buy when the price touches the support, but also buy below support while you start looking for resistance. Once the price touches the resistance, you can sell above the resistance with a stop, and your target should be the support of the range. A second strategy is to trade the breakout of the range. As this is a neutral pattern, the breakout can happen on either side. When the price has broken out, you enter the market and target the height of the box range in direction of the breakout.